Okay, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Wednesday, July 18th, and I'm Michael Boutros. Great to be with you guys this morning. Marco, Peter, Pete, we got both Pete's in the house. Ty, great to see you guys this morning. So, lots to talk about. This dollar just won't relent. I've been a little bit on the sidelines for the dollar crosses. Um, Gave it a shot on the Aussie long last night. That broke. We got a lot to cover today. So look, dollar yen, Aussie dollar, Aussie Kiwi, and crude. All the updates from last night are still in play. Looking for some exhaustion on dollar yen close by. We'll go over the previous update as well on DXY, sterling, Aussie yen with the pullback. Finally, we were looking for that. Peter, I got your question on gold. Yeah, what a break yesterday, huh? I didn't even notice that happened during the webinar you were saying. So that 1239 break really just solidifies it. Okay, not only did we get the break, but we closed below. So gold prices, by my estimation, are still in a little late here. I had my order at 113.27. Too late? What trade are you talking about there? On the dollar yen piece? I think you put the decimal place wrong there. So I think you mean 113. So look, yeah, we'll take a look at dollar yen first. Let's start right there, okay? As always, guys, feel free to throw out any questions or trade setups as we get going here. But I do want to get in dollar yen very aggressively here because I think we're coming into a big area. So the first region, it's 1330. So if you have your limit at 113.20, we haven't quite gotten that high. I don't know if it's too late, Ty, but I'm looking for validation today in the US Open. If we fail to make another run at that high past 9:30, past 10, especially if Europe closes, I'm definitely in favor of trying to fade the move. Now, 113.30, what is that? Well, you have the key 618 retracement. Here's the weekly chart for dollar CAD. The key 618 retracement of the decline, okay, from the highs that we made back here in 2016 to that low that we made. Yeah, the 618 retracement there and the long 200-week moving average, okay? Both of those line up essentially at, I think I gave you 1320, 1330. So right in this region right here. Whoops. Right in this region right here, right? So we're looking for a possible exhaustion play near term off this. Look, at the end of the day, Ty, what we need to recognize is on a weekly close basis, this thing is still vulnerable for further gains. We just broke multi-year trendline resistance. The only thing that keeps me really hesitant on trying anything on the long side is the fact that we have this confluence resistance here, long-term moving average, key 618 retracement, and don't forget the objective monthly opening range highs. So there is a lot stacked up here. So that means two things. If we get the break, we're likely to see acceleration. Your next topside objective doesn't even come until 115.30. Or you get some sort of exhaustion pullback here in price, which is kind of what I'm favoring, at least for the near term. Okay, so momentum is, obviously climbing to levels we haven't seen in a while. This is pretty important to me. Near-term support 1165, right back where we were. Near-term bullish inval. So the thing that would put me on the bearish side would be a break back below 1088. Okay, this spot. So right now, above 1330 or into 1330, I'm not interested in taking a long exposure. I do want to look to see if we find some sort of exhaustion here. Weekly charts, right? So Ty, the invalidation level for the bull is 1088, 110.88. If we get back below this, okay, that would be a break back below that objective range break that we were in for a week. It would take us back below slope support since 2012 and would sort of invalidate this as a false break scenario. Okay, for the bear order, the fade order. So the bullish invalidation would have to be against the high, against the high Ty. How about that? Let me get into the details. So this is the weekly chart. Here's the daily. So the daily chart on the upslope for the near-term ascent off the yearly lows has the upper median line parallel right there as well. And you can see that today we literally went for a tag of it. So Ty, I'm with you. I don't know if we get the last extension to 1327. That would be the ideal play. If price opens up the U.S. session and into the close of Europe, we push back below the yearly open, 112.65. That might be an opportunity to short against this high. Okay. Now it's going to be a bigger stop. You have to be aware of that. Okay. It's going to be a 40, 50 pip stop. Not my favorite scenario, but that's the way I would play the reversal here. Let's see if there's anything, Ty, near term, shall we? One thing I do want to note before I leave the daily chart. Yes, we are coming into resistance. Yes, it is a longer term moving average. Yes, it is weekly resistance. And there is a key Fibonacci retracement, but with a capital but, you're still an overbought on the daily chart. Okay, so anything that we take on the short side to fade this, you want to be really light with your leverage. You want to be super nimble, right? We're trying to call a high. The market's been rallying. It's been a nonstop, what, 3%, 2.4% rally to the upside. So we want to be very mindful of trying to fight this, but I am looking for exhaustion. So what does near-term price action say? Here's what it looks like. This is what I was looking at before the webinar. Let me take a step back. The 70 break here, Ty, was actually an entry with a real tight stop against the high. Okay, you'd be up about, I don't know, 20, 30 some pips at this point. So if this is it on a rally here, you want to see failure ahead of this high, and that's what your stop would be against, ahead of that level. So that's kind of the game plan for me heading into the US trade session. I need to see some sort of near-term recovery to get a decent stop against this level. Looking at this on the near-term front, you did have some building divergence into these highs. Again, it's 2 reference points above 70, so it's not your typical strong divergent signal, but even a trigger break here, divergence into the trigger break, that was a decent signal for the short side. Okay, so first things first, near-term support, look for the 2018 yearly open back again at 112.65. Could see some support there to push higher. A push higher would offer okay, excuse me, sorry about that. A push higher would offer another entry to try to get in against that high. But that's sort of the thought process I'm working here with dollar yen. We're just looking to play a pullback off of uptrend resistance. Make sure that we understand, where we are in trend and what we're trading off of. So Ty, I think you keep putting the decimal point wrong, man. It's 113, 113.13 was the overnight high. Yes, the high was 113.13. Absolutely. So we didn't quite get the extension into 1327. Again, if European markets close 11:30 here in the US, so we're trading anywhat near this high. I'll be looking for near-term triggers against that high to try to press this lower. Okay, but be nimble here. That's the idea. The whole idea for dollar yen is look for failure, look for a near-term exhaustion high below 113.27. Make sense, Ty? He says, yes. All right. Awesome. Interesting, because I've been looking at dollar yen like nonstop the last couple of days, which is very unlike me. But as it stands right now, no change to any of those levels from last night's report. We've simply stretched higher into that 618 line. By the way, this is the 618 line of this pitchfork. So that's where this slope and this gradient comes from. Found resistance, found resistance, found resistance yet again. So I'm looking to validate that we have a near-term high in place here intraday. He says, I've been waiting for this trade. Yeah, me too, Ty. Me too. And if it's not there, I can't advocate chasing the trade, even if we have, even if we have a strong opinion on what the market's doing, unless the setup is there. I have a respectable stop. I have a well-defined limit. We have to stay disciplined. So that is the abomination. Dollar yen, my friends. Any other questions or trade setups, let me know. Hi, Michael. I hope you're doing great. Thanks, Roxy. Could you please take a look at crude? If you get a chance, absolutely. Crude is on the list. Huge levels. Can Kelly says, now I'm watching for 112.96 to short on this trade. Well, let me ask you this. What do you have at 12.96 for the short, Kelly? What do you have there? It's the 1 hour retracement to the 618. So here's the one thing I'd be concerned about, okay, with that kind of analysis. Typically, I'd be with you, Kelly, if we had some sort of conviction low in place. Yeah, I know this. Guys, I know the sound keeps cutting out. I'm sorry about that. Oh, okay. Um, my problem with that, Kelly, is that you don't know that this is a low, right? So yeah, if you take a retracement, right, from here to here, which is I think what you're talking about, right? The 618 comes in at 112.90, 112.97, right? The only thing is this: you have no way, Ty or Kelly, we have no way of knowing that this is the low. If we look at like real near-term price action, right, and we get some divergence, you get the 70 break in momentum back above oversold conditions, then we can tack on this retracement with some conviction. But the problem you run into is if you start doing this, every time the market starts to stretch lower, you take the retracement to the new low. What if this breaks lower? Now I'm going to take it to the new low, to the new low, to the new low, and you're kind of chasing price. So the better thing to do is wait for some sort of near-term reversal in price, whether it's a divergent signal, a trigger break to the upside, an outside reversal candle, something to suggest that a low is in place. Then we tack on that retracement and look for that. So Kelly, I'm with you in the methodology that you're using. I think it's just a little premature to look at a retracement of this decline here right now, right? Because I don't know that this is a low yet. So that's all I was saying. Ideal scenario, Kelly, this thing drops into the yearly open. You see some sort of divergence. You see some sort of reversal play. It recovers, and then it gets into that 618, whatever it ends up being with the new low. Does that make sense on the thought process there? He says, watching the trade, following your guidance. Cheers, Kelly. Yeah. So I'm all about putting on the retracements for near term to find entries, but we want to make sure that when we're using these tools, we're using them, the most effective way. And I can't, I never can really advocate throwing on a retracement until we know that there is a near term high in place, or get some sort of reversal signal. So, for example, something like this: market's going down. I could have tried a retracement from here. I could have tried a retracement from here. And then as it made a new low, now I have a new retracement. Once you get this reversal candle to the upside, you start to make a new low, right? We try to test the lows, we fail. Now this retracement has merit, and you look to play the upside targets. So there's a little nuance there, but I see what you're thinking, and I'm with you on that as far as trying to nail down an entry on this. But that might be the high. We shall see. I think the European close will be the tell here, guys. Okay, so that is dollar yen. Spent a good amount of time on it, but it's actually been what I've been focused on most, just because the rip has just been insane. We broke big resistance. We saw acceleration, which is what we want to see, but now we are testing objective resistance here. So on the lookout for a near-term exhaustion high sub 113.27. Next up on tap, I do want to just touch base on Aussie. I got stopped out on Aussie long here last night. Here's what Aussie looks like. So the basic premise, well, let me go back to the update from last night first. So here's the chart look like, right? Last week, we put out an update as we were heading into 74.75. We were looking for the downside. Now, the downside, we were looking for either a hold here to get long, which did offer a play, or back at the lower parallel. Once we got this lower parallel bounce, this is where the initiated long position against that low. We faded out most of that position on the way up. I thought this break of slope caught this 618. And that 618 also has former slope resistance, break, acceleration. pivot on both sides, right? And that converged on the 618. So I liked this drop holding here for a little bit of recovery back into the monthly open. Obviously, that didn't happen. Here's what the 120-minute chart looks like for Aussie dollar. Okay. Okay. So here's where we're at. This was the level we needed to hold. I was willing to even accept a drop into 73.66. So that's actually the 618 extension from the decline off the highs. You can see that 176, 73.76 broke. It was a really tight stop against the low. So I'm not really like teed off about it, but the break saw acceleration right through 73.66. There's the 786 retracement. As I said, we're looking for a hold here. If price fails to hold, your next downside targets are 73.48, which we're checking right now. And then the big region, which is why, again, I find myself not knowing what to do with Aussie here, is 73.27 to 73.36. Look, guys, we've talked about 73.27 for months. Here's the Aussie dollar weekly chart. It's the 618 retracement of the entire ascent from the low that we made in 2016. So a huge pivot, huge. Key Fibonacci region, former swing lows from 2017, slope support. It's all here. So what are we going to do? Are we going to sell into slope support? I can't bring myself to do it. So unfortunately, guys, if you're not already short on Aussie, I just don't think it's prudent to try to do anything here. The focus is still lower, obviously. The initial weekly opening ranges have broke, so I do think the downside still has a little bit more to go. Near-term resistance 73.76. Would I try to sell there? It'd have to be a pretty convincing near-term trigger to get me in. But the focus is on whether we get that last and another drop into this key region. Remember, 73.36 is the newly registered low day close for the year. That's here. 73.36. 73.27 is that long dated 618 retracement that we're looking at on the weekly charts here. Okay, so there's a lot down here, guys. I don't know, from a trading standpoint, if you're holding shorts, I bring stops down above 73.76, just above this region. Okay, or break even if you don't have that good of an entry. But your downside target 73.48 that got taken out, and then the next big region is right here, 73.27, 73.36. Okay, so what does that mean? Again, initial focus heading into US trade session. If you see failure out of 73.76, look for another drop towards that low. And ideally on a weekly close basis, we do hold that 73.20 level, 73.27. If that gives out, guys, there's disaster here, right? There's nothing down until like 71, 71.45. And those are just former swing yearly lows. It's not even, like a major level. Don't fade 73.27. Yeah, not on the initial approach, Ty, because the way that we've been acting here, that's a good question. A lot of times, how do I say this in a way that makes sense? So look at how price action reacted down here. If this was a critical support juncture or a level of more significant play, I would want to see a reaction like this. I'd want to see a reaction like this. I'd want to see a reaction like this, right? We came into this support level 4 weeks ago. Okay, 4 weeks ago is when we registered the low at 73.22, right below this. The rebound was so short and held former swing lows. as resistance. So for me, this is the whole world for Aussie dollars. 73.27, 74.80. We've been talking about it for a couple of weeks now. On an intraday basis, Ty, I don't necessarily have a problem trying to fade 73.27 on a decent trigger, but you shouldn't be targeting anything outside the range. So even if we get a drop into 73.27, let's say it's a really strong divergent signal and momentum, the oscillator comes up here and makes a low, you got a nice trigger break, I'll take it, sure, against the low, especially if it's 73.27. But I wouldn't be looking to play anything outside this range until we finally clear back above the monthly open. So the initial target would still be 73, 76, and 74. No change. Okay, Ty. So in the event that we do want to try to fade that move, that's how I would look to play it. Does that make sense? It might be a decent fade, but here's what I'll tell you. The dollar breakout is legit. Let's take a quick segue, guys, before I jump into Aussie Kiwi, which actually has been my favorite play. Here's the DXY. Our bearish invalidation level broke. Okay, bearish invalidation, and we highlighted this setup on the previous update. Here was the DXY. We noted the fact that we could find another rally here early in the week. My ideal scenario was to find resistance right here at 94.92. If price was moving lower, that was the kind of primary objective here. A rally should be capped by that level. Well, price ripped right through. Here's DXY. Okay, price ripped right through. Okay, it's taking out at this point the July opening range highs. So today's close matters. Today's close matters a lot. If we close back below the initial objective monthly opening range highs, that would be a failure of a break of a monthly opening range, in my opinion, and that would again suggest that you're at risk for a deeper pullback in the dollar. I don't want to be stubborn. Dollar shorts have not paid off this week. So we need some really strong conviction on a little bit more of a reversal here. But DXY, I mean, here's the daily chart. We're checking the high day close for the year. That's 95.32. Okay. So if we close above that, objectively, we have to look higher. For me, right now, favorite scenario is that this exhaustion holds. Momentum closes below former support trigger, now resistance, and we get the move lower. But we do have to find resistance basically here into the US trade session. Okay, does that make sense, guys, on kind of what we're looking at here with the DXY? Dollar breakout and euro right on the breakdown line. Add gold and silver breakdowns. So gold, yeah, we're gonna go over gold in a moment here for Peter. I know he's looking for entries on that. So a break of the RSI trend line would mean further upside. Roxy, it would negate the bearish momentum profile, right? We think about things objectively. So we always talk about momentum, right? In strong uptrends, we want to find support ahead of 40. So if you take your 40 line here, ever since the low that we made for the year, every pullback in momentum has found support at or ahead of 40. That's constructive. In strong downtrends, we want to start to find resistance at 60. So as long as the market is moving lower, every rally in momentum should fail at 60. Failure ahead of 60. Failure ahead of 60. Once that starts to change, now there's a change in the momentum profile. So this support trigger has 5 touches. The break is what validated the reversal or the high that we've been working off from last month. So yeah, Roxy, on the way up, if this holds on a daily close basis, that would keep the bearish profile in play. Wouldn't necessarily be bullish, Roxy, but it would negate the bearish profile. Does that make sense? It's a little bit of shift there, but it's very important that we keep that in mind. You know, a lot of people are like, well, it broke the support trigger as resistance, so now we're bullish. Just because you're not bearish it doesn't mean you're necessarily bullish. And this is the biggest misconception retail traders will have, right? Well, you said bearish invalidation was there, it broke, now I'm bullish. No, that just puts you not bearish anymore. Doesn't necessarily mean you're bullish. So, you know, if we hold this and it continues to hold that trend line and price holds below the high day close, you know, that doesn't that keeps the bearish profile in play. It doesn't refute the bearish profile. So it would continue to support that the fact that, you know, we could be moving lower. On the move in RSI, Roxy, what I do want to see is what we just talked about earlier, that phenomena that 40 holds of support in broader uptrends. If dollar yen is turning on the turnaround in momentum, I want to see the oscillator drop on a daily basis below 40. And that would be another change in behavior we haven't seen since February, and certainly would suggest again that you do have a little bit more of a significant technical high in place. Make sense? It says, okay, perfect. Thank you. Cheers, Roxy. Great question. Great question. So I'm not a big fan of this, you know, obviously at this point, this pitchfork, guys, you know, it caught the low perfectly, and the pivot on the 50 line has been great, but I don't really want to stress this too much. I don't want to stress it too much from here, okay? So that is DXY, and that's number 3. Number 4, let's jump into Pete's question here. Why do you think DXY rejected 95.40 twice on the hourly? What do you mean, Marco? That's the high day close, man. That's a resistance level that we've highlighted for days now. So remember, the days that register key market highs and lows, the closes of those session, Marco, will tend to be very technically significant. Just think about it from a trading psychology. The market made a high. I thought it was 95.43. It was 95.40. No, it's 95.32. Close 95.32. Yeah. So I think you might be looking at this high day close, right? And point in fact is I wouldn't blame you actually, Marco. I think is that what you're looking at, this high day close. So we actually made another high here on the 6th, on the 28th of June, Marco, and it was the same exact high. So this is the high is literally 9553. This high is exactly 9553. So I will usually tend to use the most recent high day close. If a new one was set at the same exact level, it means that once again the market reached into that level, it held, and there was consensus at 95.32 to close that session. So markets don't work in a vacuum, right, Marco? You'll get a couple of couple pips above. You know, it's just the way the market works. But that has been sort of my line in the sand. If this is a more concrete high, if this is more a significant, technically significant high, we really should not close a day above 95.32. If it does, you're right on course still for a move towards 96, I think. Okay, but base case scenario, we get a close below this today. You know, they look for the possibility for the fade at that point. Make sense? He says, yes, okay, all right. Right on, Marco. Good question, good question. Okay, Pete, here's what gold looks like, man. This thing just got massacred, okay? 1239 was our line in the sand. Or 1236 on the weekly chart specifically. That's the stretch low that you made back here in December of last year. But there was so much here, guys. You had the 50% retracement of the 2016 advance. You had the long 200-week moving average. You have the former swing lows from December and basic trendline support from 2016, 2017, 2015, 2016. And there it is right there. Okay. So big support. big support. Now, we haven't made a weekly close below yet, right? Which is what we're going to necessitate this week to continue to favor the downside. But your next upcoming downside targets, you have the 618 key retracement of the advance from that low we made in late 2016. And then you'll have the close low that we made back in March, but more importantly, the 50 line for the slope that we're following, and that converges just below the just below 1200 essentially. So, man, below 1245 at this point, Peter, we have to respect the downside, man. We have to respect the downside. Okay, that's weekly. Here's the daily chart. Okay, so basic 786 retracement from the near-term advance just off of that July low from last year. Caught support. Now, not only did yesterday break and close below support, below uptrend support, it also closed below the median line for the current formation we've been following off the highs. Okay, one more thing, trying to keep it as objective as possible, right? Take opinion out of it. To me, looks like an objective and clear monthly opening range break. So here's your monthly open. You set a low, you set a high, you test the high, it fails. You test the low, it sits there for another 2 days. There's the break. Objectively, aside from what Mike Boutros, Jamie Setley, or anyone thinks, objectively, you're bearish below 1239, 1240, this region right here. All right. So as far as entries are concerned, let's see if the near-term charts have anything for us. Here's what the intraday chart looks like. So we were working with this slope, remember, early in the week, and we said, look, just to start off the week, 1239 is the line in the sand. We're right there. Any longs you take would have to be against that swing low, and you're basically looking for a breach back above 1250 to get this thing going. Well, even when the pitchfork doesn't offer too much play or doesn't stay in play for too long, the break still offered that clarity on a downside directional bias. Okay, so again, near-term targets 1215. This is going to be the let me zoom this out for a second. So this is going to be the 618 retracement from the ascent off that December low from 2016. This right here, 1251. And again, the 1200 handle, 1204, ends up being the March low week close. So these are your next downside targets on gold. Here and here. Key resistance and bearish invalidation. So those are your new targets here for gold. So look, you're playing towards the bottom end of the range here, Pete. But if we get some sort of recovery near term, the first area to look for resistance would be along the median line because the slope has offered pivots on both sides, right? So that'd be your first area of interest, like 1230. If we're heading lower, I do not want to see price max 1239. It has to stay below this region. Okay. So guys, not only did we get a break of a major key support, not only did we get a break of a major confluence region that we've been looking at and longer term moving averages, but an objective break of the monthly opening range and the weekly opening range. High, low, high, break the low, looking for a late week low in gold. Okay, does that make sense, guys? So we try to take a step back and see as objective as an approach as we can. How many indications, how many order or factors, technical indicators do we have that are all pointing lower? And the break below 1249, in my humble opinion, was really big for gold. So 1215, 1204. I would not try to fade this rally under any circumstances, guys, until we get down into those levels. And if you're looking for reentry, like I said, Pete, initial level would be right here. Okay, stop would be against 1240. See if we can hold that weekly opening range lows. But that'd be the first level to look for. Downside targets, I think, are pretty well defined. Make sense, Peter? He says, thanks, watch and wait. Cheers, mate. Yeah, I think if you're not already short, you have to wait for the reentry. I agree with you on that. But yeah, I did not think 1240 was going to break. That's it's pretty big stuff. Okay, that is gold. Let's circle back to last night's update on Aussie Kiwi. That'll be number 5 on the session. Aussie Kiwi, it's a slow burner. But if you're someone who wants to be a little bit more cautious or you're not into all the crazy intraday chop, this was a decent play. So really quick on the weekly charts, we've been talking about Aussie Kiwi. Someone brought it up here in the webinar yesterday, and I just couldn't stop looking at it all day yesterday after you brought it up. I'm not remember who it is. If you're in the room, remind me if you brought up Aussie Kiwi yesterday. But it was a great spot. It was a great spot. So look, the basic premise of the trade here is Peter, it was you. Well, thank you again. The basic premise of the trade here on the weekly charts is the 52-week moving average, which has been a ridiculous pivot in price. Every break has seen acceleration, break, acceleration, break, acceleration, break, acceleration, both sides. Last 3 weeks, it's been perfect support. You see that? Support, support, support. And we're testing it now. If we get below 108.66, that's a key support region, even on the near-term chart, so I'll show you in a moment. If we get below that, you do have to respect a little bit more of a downside play in Aussie Kiwi. Add to that, if we do close at these levels or below, that would constitute an outside day reversal off slope resistance. And again, that would be a bearish development. Keeping in mind, looking at the weekly momentum signature, again, 60 has been unable to be broken since the high we made last year, which keeps the broader bearish momentum profile in play. Near term, what does it look like? Well, here's what the daily chart looked like yesterday, and here's what the daily chart looks like now. Okay, so a modified pitchfork off the lows has been very nice service. You had hey guys, I'm trying to be patient with this sound problem here that keeps coming in. I really do apologize about that. It has offered very good service on the advance, resistance, break, acceleration, support, break, acceleration, break, acceleration, support. Look where it comes in now. That same level we highlighted on the daily chart, on the weekly charts, right? The 200-week moving average at 108.66. Guess what? The 200-day moving average is there now as well, 108.60. Add to that, you have basic median line support, right? Pivot, break, pivot, break, break, pivot. Here we are again. So the play was to the downside against resistance. This is where you want to be taking profits off the table. I was out of this way early. Again, I kind of got out right ahead of the monthly open, so a little early on this one. But this is where you want to take off some off the table, bring your stops to break even, maybe even see an advance. Keep in mind one more objective feature, guys, and this is why I like Aussie Kiwi so much. The monthly opening range has simply taken shape, not just below resistance, but below yearly open resistance. The high that we made so far for the month was 109.92, right in this range that we've been looking at, the 618 retracement of the entire decline from 2017 and this year's open. You have the 618 line, okay, of the slope right there as well. Okay, so 109.96, 109.83, critical support, the objective, critical resistance, the objective monthly opening range, and slope resistance. So a breach above this, sayonara to the bears, we're looking higher. Right now, the focus is on this key support. Here's what it looks like intraday. Also, guys, one other thing, divergence. It's subtle, but it's there. Price action with a higher high, the oscillator, with a lower high, right? All things held constant, this thing is bearish, but the pullback is at initial support. Here's Aussie key on the intraday. So I highlighted this downside slope for you yesterday, just off the highs. This is what we did during the webinar, remember, Peter? And we were looking at it right here, and I was like, look, Pete, this is support, right? The weekly chart has support here. The daily chart has support there. Here we have weekly and daily moving averages all converging around 108.60. And that's also, again, the objective monthly opening range low. So there is a lot here. The rebound play came right into resistance. First level that we were talking about was 109.04. And as I said yesterday, 109.04 and even 109.35, both of these are levels interested for the pullback. Ultimately, I think this broader pullback may yet have a new low to make. If we break the lows, we're looking at 108.34, and that's what we got. So we rallied into 108.04. This is bearish invalidation, okay? Here's the downside break, and again, I do think we ultimately see this break to give us a move down towards the 108.34 level. Okay, and this was sort of a decent synthetic hedge, right? Because I liked the Aussie dollar long position. That didn't work out too well, but an Aussie Kiwi short actually was a decent way to kind of offset some of those Aussie losses on a pullback here. Okay, so what's the play? If you don't have any entries on Aussie Kiwi from here, you don't do anything. Okay, if it rallies again, you try to get an entry for a short against this high, but the downside target is 108.34, and that would complete a basic 100% extension, 2 equal legs off the high into the median line. All right. Any questions on Aussie Key? Thanks for bringing that up, Peter. I was really taken back yesterday when I started to look at it, because we've been following the daily charts, but ever since this whiplash failure here and pullback, I really didn't know how to play it. But now that we've gotten a well-defined monthly opening range, we've highlighted major resistance at this threshold, slope, Fibonacci, moving averages on the downside. You're trading at support right now. Pete, does that help on Aussie Kiwi? Does that add some color on what we're doing here? He says, yep. All right, awesome. So that, my friends, is Aussie Kiwi. What's next on the list? Roxy, was it you for crude? Here's crude. Ty says, is Jamie doing his webinar today or still canceled? Thank you. Ty, I haven't spoken to Jamie this morning, but we're still on the schedule for today. So yeah, I'll just drop him a message here, but I'm pretty sure midweek strategy webinar is as scheduled at 11 a.m. today. Okay, crude. Oh, crude, my friend, crude. So it is a huge, huge area of support. Now, a couple things to note. Today, I think it's at 10 o'clock Eastern. No, a little bit later. We have it at 2:30 here on the economic calendar, but we do get crude inventories. Typically, you don't see me warn you about crude inventories as a possibility for event risk, but where crude is trading right now is critical. Now, we have seen that both the Saudis and the Russians have seemingly agreed to output more into the market, release more excess reserves, and in which case to kind of soften the crude prices, which were obviously ripping, late last month. So look, the basic premise of the trade: forget all the hoopla, forget OPEC and all this nonsense. You do want to be around for the crude inventory release later today. Again, that's labeled on the chart here at 2:30. So just something to keep in mind. But I'm sorry, this is GMT time. It's at 10:30. I'm sorry. So we got 10:30 inventories. Okay, just keep that in mind. So anyway, to get back to the technicals, the basic premise, and you guys all know this trade I haven't necessarily given the updates on a more timely basis on the daily updates, but you know we've been following this in the webinars like no one's business, right? And if you go to the previous crude update, okay, you can see where we were in price. We were talking about the reversal right up here. This is the daily chart, but I wanted to show you the weekly chart because there's a lot going on here. And this thing stops freezing, I would be a much happier person. Okay, are we back? All right, so the basic premise of the trade was 2011 low, 74.94. Slope resistance for the median line, and he had a sliding parallel here in red. If you take it to the high that we made for the year in January, caught the highs, caught the highs. Look at that. Look at that. And then as we highlighted it here on the report, we were saying, look, we just made an outside reversal off resistance. This is confluence resistance. Momentum has held 70. That's bearish. Period, exclamation point, end of conversation. The first major initial pivot was 71 into 70.41. A huge pivot on the way up. You have the median line for the current operative slope right there. And that was the first target. Secondary target is down here. The 50 line, or the sliding parallel that has caught support since the start of the year. Here's your weekly chart now. Here's the pullback, slope support, sliding parallel right there. Okay, bring it into a line chart and gives you a little bit more clarity, right? Daily chart looks like this. There was the reversal off the highs. We spent another day or two there. We tested the monthly open resistance. It held. Downside shot right into the downshot shot right into 70.41, 71.21. We sat there for another 2 days. Here's the downside break. 68. Last target I had for you guys was 67.14. 67.14 is simply, okay, the 2010 swing low. Okay, 2010 swing low, slope support, and the 100-day moving average are all right here. Okay, so was this trade put up on the intraday update? Yeah, so this was on last night's update, Ty. It's right here. Actually, this is the one from 7.5. Last night's update had all three charts on there. Okay, so crude weekly, crude daily, and crude 240-minute chart. So the basic premise of what I wanted to highlight yesterday, guys, was how critical of a support structure this is, okay? Again, your 2010 low, your 100-day moving average, and you have slope just lower. Not trying to sell any further from here, but I am on the lookout for possible exhaustion down here. So we're testing, let me show you the intraday chart right now. Okay, so we're testing that level again. I do think you get the drive lower into the US trade session. Anywhere here is fair game for a reversal, in my humble opinion, or not a reversal, but you know, a near-term low in price. Now, on such a scenario, your initial target would just be slope. You know, I'd probably take a parallel off that new high that we made right here, and I'd look to be targeting this slope on the rebound. If we find a decent low, we get a decent trigger, this thing comes back from overbought, gets above the resistance trigger, that might be a good fade opportunity against the low to look to play the upper parallel. But if you are holding shorts, both of these levels, boy, would I be very mindful, okay? If I was holding a short, which as a disclaimer, I'm not, but if I was, the first limit would be 67.14, 100%. I would have taken out 50% of the position there, if not more. Stops at break even. Final limit just above 66, 66.19. The reason I allot that is because if this is just a simple correction, that's where I'd want to see a little bit more of a stringent support hold. And also that is the slope that we're looking at here in the daily chart. You see that? You see where my cursor is? So that slope, which caught support right here, converges on the 100% extension. You don't get that too often. You don't get that too often. Now, I do want to just caution one thing. Guys, keep in mind that I lost my train of thought. Oh, keep in mind that a closer look at price action, and the thing that concerns me about trying to fight this is the declines all seem five wave-ish, right? So here is 1, 2, 3 being the longest wave, 4, 5. Looks like a ABC correction. 1, 2, 3, 4. That's why I'm looking for one more low before another larger three-stage correction to the upside. So even from an Elliott standpoint, if we take a look at the wave count, I do think the broader risk is still lower. It's just that we're coming in some near-term support. And if we're going to get some sort of near-term recovery, a relief, a blow-off, if you will, I do think it'll come off one of these two levels. Okay, watch crude inventories today. If we do get a big build in inventories, so way excess more than expected, if we break below 66, it's a long way down. It's a long way down. 63.75 would be the 618 retracement. That's also the low that we made for June. And that would be your objective downside targets if this breaks. Not my favorite scenario, but we always have to map out levels on both sides, right? Yeah, so Ty, does that answer your question? Was this on the intraday charts to sell the high? Yeah, so the high, that was the update from previous. I always have the previous update for you. So crude on 7.5 earlier in July, that's when we had highlighted major resistance at 74.90. That was a huge level, huge level. Any questions on crude? Pretty clean decline coming into initial support. I keep missing trades I will take. Ty, that's completely okay, man. I don't want you to get discouraged by that. It's the name of the game, man. It's the name of the game. You're never going to catch every position. And guys, just between me and Jamie, we put out so many trade setups to you guys on a daily basis. We're ourselves, we can't be in all those trades either, right? It's all about timing, entry, and really picking your spots. So someone might have gotten a play on this for the short side. When we publish that, some guys may have, missed the initial entry, got short on that last spike today. There's a lot of different ways you can play it. I'd rather miss an opportunity than regret a trade, Ty. So the best thing to do as you're getting your footing here with the strategy is, oh, I missed this trade. Where was the entry? Where would I have gotten in? Go back in price. Take that into consideration. You guys should be keeping journals. If you've been trading for 5, 6 years, maybe not so much as now. But if you're just getting traded, or you're just getting started, or you're getting your feet going with these strategies, keep a journal, right? I have no problem. Like I said, I'd rather miss an opportunity than regret a trade. So don't let that discourage you, Ty. In fact, if the market moves as I expected, but I just missed entry, I actually I feel consoled by that, right? There's always going to be more opportunities. The market will always offer more opportunities. Crying over missed trades or getting upset over missed trades, it's not going to get you anywhere. The best thing to do is keep your eyes looking forward. Okay? I wait, then I miss the critical price. So Ty, is it because you're trigger shy, or is it because you're not able to recognize the trigger to get in? Because a lot of times you're just trigger shy. And what happens is I want to be short, right? So I want to find the best entry. I only want to risk 10 pips. So if I get 10 pips from the high, I'll short it, right? We fall into this really defensive stance. And sometimes, Ty, in my personal trading, I could just tell you for myself, I've been guilty of that many times. Many times, missing amazing trades just because I'm waiting for the ideal entry level, right? I want to get that tightest stop. Markets don't work that way. So sometimes you just got to be in it to win it. Um, and we use good risk tolerance. So if you find yourself, look, I'm getting sidetracked here. I do want to go over some more trades, but really quick, Ty, if you find yourself really hesitant, or you're really you find yourself like unable to get into the trade, you're very trigger shy, I can tell you right off the bat, the best thing to do, reduce your leverage. Reduce your leverage. If you're trading X lots on average, go half X. Okay, if you're trading, I don't care if you're trading micro, mini, standard lots. If you're trading 10 lots at a time, go 3 lots on this trade, right? Until you build up that confidence, you have a couple of good trades under your belt, then we can start to get a little bit more aggressive with the leverage. But the best thing I can do, and I do this myself, when I find myself really trigger shy or I'm missing a lot of entries, a lot of times it's because I don't want to put all that on the table. Reduce your trade size. I know it sucks because if the market moves in your direction, now you're like, damn, I'm in this great trade at 2 lots when I should be in at 20. So that's okay. We have to stay disciplined. Okay. So a little note there. I hope that helps guys in the room. Marco says, I totally agree. And it just comes with experience, right, Marco? It's everyone goes into spouts where they're just, there's a lot of headlines. There's too much news. The markets, the price is not moving exactly how I expected. That's okay. That's when you take your foot off the gas, right? You don't get upset that you're missing all these moves. You want these moves to manifest so we can get further clarity. Okay, so little note there. That is gold prices. That is crude prices. We covered gold. That's number 6. Sterling, number 7. So sterling, man, this thing, I guess, is going straight to hell. I have no clue. We got some really crappy CPI data in overnight trade. There was some news yesterday that basically may have averted disaster for Theresa May. The way that this is all going to pan out, guys, I have no clue. I'm not a politician. I'm not a political science major. And to be quite frank with you, obviously the humanitarian told, fine, sure, but I really don't care. What I care is price. And when I saw price break 31.64, you guys all know where I stand. 31.64 has been the line in the sand for me for weeks. Okay, we defended it here. We were taking long positions. Once it broke again, we were neutral. Once we broke back above earlier this month, again, I was taking long positions. Now we broke back below. I have no clue what to do here. I really have no clue what to do here. Pound is at risk for complete disaster in my opinion. Now I might be capitulating, and this might be a great opportunity to actually find a low. But here's the daily chart, guys, or here's the weekly. For pound, this is the only thing I'm looking at into the close of the week. Period. Okay, period. 3027, you've all heard me say it before. 3027 is the swing lows that we made in late October and November of last year. Also, the lower median line parallel of the current operative slope formation we've been following off the yearly lows. This was support, 131.64. Like I just said, we've been fading drops into that for the last 3 weeks. Here's another break lower. Momentum now breaking with authority below 40. Obviously, we have to see the weekly close here, but man, it's make or break, guys. 3027. If it cracks 3027, 2877 is the 618 of the entire advance off 2016. But boy, this is. I mean, if you're looking for a sterling long, you're praying for a hold here. If you're holding along, man, if that thing gives out, I'd be out of that quick. Okay, so I think for sterling, guys, for all intents and purposes, keep the weekly chart in view, especially heading into Friday. This is all that matters for me. Close below 3027, forget it. If we close at these levels or better, resistance, right back up at 3164, the same level we were trading at support for the last 4 weeks. That should now be resistance. You also have the 50 line in there as well. Bring this into a line chart. You can see a little bit clearer how clean this formation actually has been. Okay, so once again, we can't get excited about trying to sell pound, and I can't try to fight it here to try to get long yet. So what do? I think this is the one where we have to sit on our hands right now. Daily momentum. I do want to highlight this as well. This is why I think, again, guys, I'm just saying my personal opinion here. This is why I think Sterling is like a sleeper sell. I think this one's going to suck so many people into the short side, then just massacre them because everyone's getting excessively bearish because of the Brexit. Obviously, Theresa May's government isn't helping. These headlines are not helping. But from a price standpoint, lower low in price, lower low in price, lower low in price, higher low in the oscillator, higher low in the oscillator. Well, now this is a trigger, right? So if this holds into the close and we hold 3027, it scares me from trying to get bearish. You know what I mean? So again, for Sterling, I'm looking for an exhaustion low, just lower from here. Maybe we probe right into the parallel to get it going. That's like 3027. Or excuse me, that's more like the 130 handle. If we get a drive lower, here's what it looks like on the intraday charts. Okay, and here's what it looked like earlier in the week. Okay, we were hoping to see support here, 3164, same exact level I've been talking about for weeks. We got into it, and boy, did it not hold. It failed right through. So there was not even a fake out here. I didn't even get tempted to get long. It just broke right down, right? And here's not only the 100% extension. So if this is two equal legs down, it's 130.31. And again, 130.27 is those former swing lows from late last year. Sterling approaching near-term support. Okay, so sorry about that. Sterling approaching late month lows again. It's make or break here. It's make or break here. 130 break. You might as well just sit on the sideline if you're not sure. Ideally, it spikes into that lower parallel and holds. So some frustration on these dollar crosses, guys, but that's the name of the game. We have to trade what the market gives us. Last but not least, from the updates we've been following, number 8 is I'm over on time again. Aussie yen, really quick. Here's the Aussie yen trade, another one that worked out beautifully for the Aussie crosses as opposed to trying to play the Aussie dollar long. Aussie Kiwi was a great short. Aussie yen was also a great short. Here's Aussie yen to start off the week. We were talking about this 83.61 level. It's a 764 retracement, but we also had some slope that converged right there as well on building divergence. Price action higher high, higher high, higher high, series of lower highs. Here's the downside break, initial target at 83. We just took out. The next downside target is 82.73. It's just a swing high, guys, a decent pivot in price, former swing lows, former swing highs, but more importantly, slope. And the slope has been pretty clean on this one. Okay, so I wouldn't tempt any further short entry or short on Aussie yen until beyond this. So if you're holding short exposure, that's the last limit. Stop start break even at this point. So if it comes back out, I'm not going to make anything on it, but that's the target as far as the Aussie yen is concerned on the downside for this pair. And again, just a really nice area from longer term slope, a Fibonacci consideration, and again, near term price action. This looks like an objective break of the weekly opening range low. It means we should be looking for a late week low here in Aussie yen. Okay, guys, I'm going to wrap it up there. I want to thank everyone again for your attendance. Jamie will be on board at 11 o'clock with the midweek strategy webinar in just over an hour. I will see you all tomorrow to wrap up the week, 8:30 Eastern, for a final strategy webinar before we head into the weekend. Okay, best of luck trading. Watch those crude inventory numbers. Again, that comes out at 10:30 Eastern, so I do want to see what impact that'll have on crude prices. Last but not least, later tonight, you do get Japanese trade balance figures. That's not the big player. I would be paying attention to Australian employment. With where the Aussie is trading, it might be just the print that we need to see a defense of that 36 level again, 73.27. Let's see if we can't get that drop. But Aussie employment data comes out later tonight. Best of luck trading, and I will see you all tomorrow. Cheers.